So today's topic is going to focus on confirming breakouts. Now, what is a breakout? A breakout can occur to the upside or to the downside as well, and it's characterized by the break of a support or a resistance line. Breakouts are seen as very profitable trading patterns. It indicates that the price has a lot of strength and that it could continue this trend to the up or to the downside. But today we're not only talking about breakouts, we're talking about how to confirm that the breakout is real. First method is the closing price filter. So let's see on a chart you have a breakout. The stock then has to close above the resistance line 2 periods in a row. And if the price closes above the resistance twice in a row, that gives a much higher probability that the breakout is true. The second breakout confirmation method is the 3% rule. Essentially, if the stock closes 3% above the resistance line following the breakout, that gives a higher probability that the breakout is true. Now, we say 3% as a general rule, but this is used by traders on a case-by-case basis. If your stock is a lot more volatile, I recommend increasing this percentage in order to truly have a real confirmation that the breakout is in fact in play. The third breakout confirmation method is the time since breaking support and resistance. If it's more than 2 days, then the premise is that if the price can remain on top of the breakout zone for more than 2 days, that the breakout must be true. And finally, the last breakout confirmation method, and the most widely used one, is volume. If you see a volume spike during a breakout, that is a sign that the breakout has a lot of strength behind it, and that it's more likely to be true. Now, the way you can see volume is kind of like a voting system. If the stock goes up by that amount, with a lot of volume, that means that a lot of people were buying the stock, were voting for the stock to go up. Now, in that particular scenario, a higher amount of people are voting that the stock is going to go up, a higher amount of people bought the stock, and if that's the case, it's probably not random. There's probably a reason behind it, meaning that the move is in fact more salient. So that pretty much wraps it up. I do want to mention that out of those 4 different methods, I don't necessarily prioritize one or the other. I think that looking at all of them at the same time is often a great way of gauging if a breakout is true, seeing as I don't only believe that it's time that's the differentiating factor, it's also where the stock closes and if there's a lot of volume behind it. Thank you so much for watching. I'll see you in the next video.